Welcome to today's Toronto Real Estate Podcast. We are so super pumped to be here with you today. And today we are talking all things Toronto real estate market statistics. But we're actually going to unveil what goes on behind the stats themselves, add some additional context, some color, some analysis to that, and give you a better sense of what's actually happening in the marketplace. So we're going to start super macro, then we're going to get a little bit more granular and get into some of the micro detail. And we're going to show you some great charts that are going to help you just understand what is going on. My name is Kori Marin. I'm a broker and co-founder at Fox Marin, and this is my partner in crime, Mr. Ralph Fox, also co-founder and broker of record at Fox Marin. Thank you, everyone, for joining us today. We are super excited to dive into all things numbers. And this is very similar to a conversation we'd be having with our selling and buying clients and some of the data that we go over with them when we're doing their onboarding meetings and really making strategic decisions, whether they should sell or buy or both, and all of that stuff that happens behind the scenes. So welcome to a behind the scenes look at how we talk about market stats with our clients.
Awesome, Kori. Thank you for that wonderful opening and intro. And I think it's such a unbelievably intricate, multifaceted time in Toronto real estate with so many stories and sub-stories going on. Very difficult to predict anything. I think even the best of analysts have been proven wrong time and time again, and things seem to be shifting and changing on the fly. And so it's really great to have these real-time stats to sort of look at and break down to try and understand what is actually happening, because we all know the media likes to have these sort of shock headlines and not really go to much depth beyond that. So we're here today, not just to talk about the stats, but to actually talk about what we're seeing and what's happening boots on the ground in the Toronto real estate market.
I love it. Okay, well, let's dive in. Let's start where everybody starts. So the Toronto Real Estate Board publishes monthly statistics about how the market is performing overall. And I want our viewers to be aware that we're really speaking to the Toronto stats here. We're not talking about outside of the GTA. So we're focused on Toronto. This is where we live and breathe and work. So this is the market we know the best. So we're focusing our expertise here. And generally, when the market stats are published month over month, this is what the media uses for their clickbait. They'll find the craziest stat here or the most hottest stat here, and then they'll run with that in a headline like sales are down 42%. And what they're actually talking about is the amount of transactions that have gone through the system versus the actual price of real estate being down 42% as an example. So I want to actually give you the real stats first in a chart. You guys can follow along here. I'm not going to go into every single detail of this because it would be super boring otherwise. So I'm going to move through this quickly, but we want to start macro and then we'll get into all the juicy stuff. So this is common to see, and a lot of real estate agents will report on these stats. And Treb is breaking down the average price for detached, semi-detached houses, row homes, and condominiums. And so you'll see the average price of each of these home assets per category. So you'll see that the average detached home in Toronto right now is $1.7 million. In the next column, you'll see that their price is down 4.2% versus last year at this time. So if you continue to follow along on that table, you'll see that prices are down overall. So detached homes are down 4.2%, semi-detached are down 8.9% in price, row homes down 2.7%, and condos down 0.9%. There should be a minus on that chart. And then if we follow along on this table, you're going to see sales. So that's the amount of transactions moving through the system. Again, this is terminology that is often contrived by the media, and people always capitalize on sales. And sales is just deals going through MLS. But this is a really important number to look at because you're going to see activity or these sales are down again overall. Detached down 7.2%, semi-detached down 20%, row homes down 13%, and condos down 30%, meaning there's 30% less sales in condos than last year at this time.
Yeah. So what's really important here to understand is prices relatively are still holding, even though we're in an environment where we have a massive drop. We're talking over 16% on average across all different property types. So it's really important to see the full story here, that prices generally, at least for now, are relatively holding, but we are seeing a significant drop in transactions on the market currently.
Exactly. So this slide here is going to give you a bigger picture. Again, this is all home types here. So we're not categorizing this by their different asset classes. We're talking about the market overall. Again, we're talking about Toronto. So we're seeing that the transactions overall across all categories are down 16%. New listings coming online month over month, new product, new inventory, new stuff is up 12.3%. So there's more people looking to sell their asset than last year at this time. And we're going to talk about who's selling and who's not. Active listings is up 67.4%. So 67% active listings up versus last year means how much inventory has not moved through the system over the 30-day period of the month. So that is basically inventory that is sitting on the MLS system. It's not moving. It's just holding, it's stagnating, it's stigmatizing, it's collecting dust. As Ralph mentioned, the average price is holding overall. I mean, it doesn't really freak me out when I see this number. Okay, we're down 1.6% on average on value versus last year at this time. And this is another interesting stat. This is listing days on market. So how long does it take for something to sell in Toronto right now? So last year, it took about 14 days, including the conditional period. And right now, it's taking 20 days, including conditional periods. So it's actually taking just over 40% more time to sell inventory on the market that actually is selling. So it's a slower sales process. Ralph, why don't you talk about the absorption rate? You always do such a great job talking about this. And then we're going to talk about months of inventory when we get deeper into the slides.
The absorption rate is a term that a lot of economists and analysts use to understand how a market is performing. And so what we're looking at is the abstract or idea. If you took all of the properties currently on the market at the current rate of sales, how long would it take everything on the market to sell? If you look here at the current stats, we're at about 3.8 months. Now, anything under 4 months is considered to be a seller's market. A balanced market is 4 to 6 months, and anything above 6 months is considered to be a buyer's market. Now, when you start to dig into the numbers, you'll see a vast difference between the absorption rate of condos, which is basically in a buyer's market now, versus low rise, which is still hovering in a seller's market, but that's dependent upon the type of asset and where it's located in the city. So we're definitely seeing a swing. And just to give context to this number, I mean, in the height of the market, we've seen this as low as 3 weeks of absorption rate. So if you start to understand the trend line, prices are holding, but we are seeing a lot more listings coming on the market. We're seeing fewer transactions, and the absorption rate is moving higher. So that all starts to lead one to think if this trend line continues, we will start to see a more significant decline in prices.
100%. So well described. So that has set us up to move into a little bit more of a granular look. So what I did here, Ralph, is I pulled Toronto's active listings. So again, Toronto-based, all home types. It doesn't matter what you are, what type of home you are lumped into this category. We're looking at an overall picture. And I went back and looked starting January 2019 all the way up till now, June 2024, to look at the trend lines. And I thought it'd just be really interesting to compare where we are today compared to where we were during the height of COVID, which was spring 2020, and where things were before COVID. And often we joke around that none of us know the dates of anything anymore. We just know that it was like pre-COVID or post-COVID. So this is kind of a helpful way for us to relate to what happened, because none of us remember what happened right before. What were we doing right before COVID? It's like our lives restarted or something, or recalibrated once we're all in lockdown. So I think this is important to see. So to remind you what active listings are active listings at the end of the last day of the month being reported. So this is inventory that hasn't sold through. So you can see in January of 2019, we had just over 3,500 active listings. Then you can see during the height of COVID, we had quite a bit of inventory sitting because no one was like, is it safe for me to go outside? Should I go see a house? Like, I don't know what to do right now. I'm just going to stay at home, nice and safe, make my sourdough bread and watch Netflix. So you'll see the trend line. So the active listings went up, but then you can see, as everyone lived in Toronto during this period, the real estate market took freaking off. And you can see less and less and less and less active listings as we headed towards the market peak, which was February, March 2022, where we had only 1,579 active listings. It just seems so crazy. This is when this is when we would list something on the market, and 3 hours later, there would be a bully offer. We have not even received the video yet, and we don't even have the feature sheets on site at the property. Like, it was already had a bully offer. Like, I was like, and it's gone. Like, it was insane.
I remember trying to book showings on properties that were holding off on offers, and you couldn't even book a time.
Yes.
Like, it was just like booked solid in half-hour increments because showings back then with COVID couldn't overlap. It was just unbelievable trying to get in at like 6 a.m. to see a vacant property. So crazy.
I know. It really was. None of us would have predicted that's how it would have been with a global pandemic happening. Then I've highlighted all these charts when these interest rate increases were incrementally coming as well, because this obviously really affected market activity. So between March 2nd of 2022 and July 12th, 2023, we almost had a 5% increase in interest rates. So that's marked there just for your visual aid. And you can see active listings start creeping up with some like bumps along the way. As you see in any analysis, there's always ups and downs. The market's responding to different things, whether it's something that's happening in the city, whether it's reacting to the news, what's happening globally, what's happening with interest rates. We're always responding, reacting to that. And then now, so it's June 2024, active listings, 9,577. Okay, so we're up. Active listings up 67% versus last year. So more people are looking to sell, with a big chunk of that being condos, and we're going to break that down.
It's unbelievable to look at where we were and how much higher we were than when the whole world was locked down and we were at home. To see us at that number versus where we are at today. It's pretty amazing to see that contrast, and it's interesting as we're starting to see all of these rate increases really starting to affect the market, especially on the condo market, especially on the investor side.
Yes. And if our viewers are looking at these graphs today and you're like, oh, I really wish I could have the data from this month or this date specifically, reach out and ask us for it. I'm happy to pull it. Like, we could only pull so much information, and this is goes far more in depth. So if you're like, I just want to know what the average price was for my condo in this month at this time, I'm happy to answer that question for you and then pull how it compares to now. All right, so moving on. So this is Toronto new listings. Again, all home types lumped into one picture here. So remember, this is new, fresh inventory coming on the market. What everybody gets excited to see on like Monday, Tuesday, Wednesday on their House Sigma apps. They want to see what's new. So again, I'm comparing pre-COVID. We're looking at the peak of COVID and then market peak and then now. So in January of 2019, pre-COVID, there was about 3,100 new listings coming on market. Now, remember, January is already a slower month to begin with. People are not like super hyped about listing their home in January when it's disgusting outside and everybody has the post-holiday blues. But then you can see the amount of inventory coming online at the beginning of COVID. Again, there's like a little bit of an explosion happening. And then a bunch of peaks and valleys happening here. But as people see the markets peaking around February and March, again, we're seeing a little bit more of an explosion of new listings coming to market, but they're actually selling through at this point. Okay, so the new people who sold around this time, they crushed it. Really good job on your market timing, because it's almost impossible to predict. Then you can see people responding to these interest rates being like, is this a good time to sell? Should I sell now? Should I wait? Should I sell? Should I wait? Should I sell? That's the question people are asking all throughout this period in here, which is March 2022 to July 12th, 2023. And then we're going to take ourselves right up to now, which is June 2024. And we have 6,800 new listings that have come online in June. All right. That's up 12.3% versus last year. And a lot of these people are condo investors. We'll talk about that. And a lot of people really feel like testing the market's the right thing to do. So we're seeing a lot of stagnant properties out there. And again, that's adding to all that inventory that we're seeing sitting online, but a big jump in new listings versus last year at this time. It'll be really interesting to see how things evolve in July, August, and then what's typically a hot market in the fall of 2024. And you want to add to that, Ralph?
No, I think you're doing a great job.
Perfect. All right, sales. Toronto sales, again, this is not price related. This is transactions moving through the system. Do not get confused with those two numbers. I'm just going to go through this quickly. So in January 2019, there was only 1,400 sales moving through the system. Then we're going to see all those peaks and valleys. But look at this. This is when the market peaks in February, March 2022. We see almost 4,000 sales or transactions move through the system at that time. That's when the market's ripping, things are selling in 3 hours, there's multiple offers, bidding wars, people are fighting and overpaying for properties just to get something. They don't even care if they like it, they just want something. And then we start to see the amount of sales petering off, again, related to interest rates and a lot of the other stuff happening left, right, and center that we've talked about on other podcasts. And then you can see here in June 2024 that our transactions are at about 2,200 moving through the system, which is down versus last year at this time by 16%. So there's less people buying homes and condos now than last year at this time, which should not be surprising based on what we've talked about on the other slides. All right, this is what everyone always wants to know. So price. All home types combined here. You got your semis, you got your townhouses, condo townhouses, you got your link homes, you've got your condos, you've got everything all lumped in here, okay? So don't freak out if you're like, oh my God, my semi's only worth, $1.1 million now. This is everything combined, all locations. So it's still nice to see. Like when I see this, I'm like, we're not doing too bad, Toronto. Like we're still going up in comparison to where we were. So if you had bought something before January 2019 and you've held on to it, you're still on an upward trajectory. Does that not make you feel a little bit relieved, people? It makes me feel relieved. We own quite a few investment properties, and sometimes I too get sucked into the clickbait and the scary negative news and the headlines. And I'm like, oh my God, why did we not sell in the peak? Why didn't we sell in the peak? So I think this is kind of like comforting to see. So the average Toronto home price was $776,000. I can't even imagine in January 2019, which wasn't that long ago, people. Like really. Pre-COVID, I know it feels like a whole other world. Then we see this market peak, which is where I put the little red star to highlight it.
It's so interesting to see that market run up from 776 to 124, and also seeing the ups and downs as it made it to that number. So really interesting. And it's also interesting to think about in context of what the future chart could look like for the market.
It gives me a little more optimism, this chart. And then you'll see right now that our average home price is $1.173 million, which, as I mentioned at the top of the slide review, that we're down about 1.6% versus last year at this time. So like nothing crazy yet has happened. As mentioned, I feel like there's a little bit of optimism, at least something visual to look at to give you a little bit of confidence. Average listing days on market. So as we mentioned, average listing days is how long does it take for one of these homes or condos to sell on average. So in January 2019, it was taking almost 30 days. And then during COVID, this had peaks and valleys, just like we keep mentioning. And in the market peak of February, March 2022, it was 9 days. 9 days. It was hysterical. Like every agent that we know was like exhausted after this little period because you just could not keep up. So 9 days is very short. And then you can see a run up, things slowing down and then picking up again in May of 2023 and then slowing down again. And then we're kind of like not doing so badly. What is selling, which isn't a lot, So you know that more inventory is out there. There's less transactions. There's more new inventory coming. But what is selling faster than it did in January 2019. So it's selling on average in 20 days. So that means what actually is selling, people want. And we always often refer to this as quality inventory. So quality inventory that looks great. It's in a fantastic location. It's staged. It has a great strategy behind it. There's a story to tell. It looks beautiful online and it's priced right. Oftentimes there's no tenant in there. It's vacant or it's owned, it's principal owned. So all of these things affect what's actually selling. But those that are actually selling, it's not doing so bad. 20 days in comparison to a lot of markets around the world is still relatively fast, though we are up 42% versus last year. So it's a lot slower than last year at this time. Anything you want to add to that, Ralph?
No, I think that even in the condo market, which is when we'll get into, is much slower than the low-rise market, certain types of condos are selling better than other types of condos. And we'll talk about that, but it's important to make that there's a pretty big delineation even in the condo market relative to the overall stats that we're seeing.
100%. Okay, so months of inventory, and Ralph did a really good job of describing the absorption rate and what months of inventory look like. So I find this slide to be very interesting. Again, all home types across Toronto. So in January of 2019, we had just under 2 months of supply. So we are definitely in a seller's market. Things slowed down, obviously, during COVID. And then we saw our market peak. So on average, in that sweet spot of February, March 2022, we only had about 1.1 months of supply. And then depending on the category, that was even squeezed even more. And as Ralph mentioned, we were looking at like 3 weeks, depending on the asset class itself.
But you can see this very steady march from literally once they started to raise interest rates to building up to where we're at now, which is 3.4 months of inventory across the board. But we are starting to get into balanced market territory overall at 4 months. But as we'll go into the next one, we'll start to see how condos and everything is performing relative to one another.
Yes. So when you are exploring whether you should sell your place or not, or what to do when you're working with your agent, you should really be asking them about the months of supply, whether you're a condo or a low rise, and then really look specifically at your category as well. Like how many other units are out there that you would be competing with? And so this makes total common sense. But if there's like 2,000 other one bedrooms out there, then you either need to wait and hold or price really competitively and make sure you are the standout compared to everybody else. Because this is what's caught. Buyers have no sense of FOMO right now. They just have too much they can choose from, and they'll know there's more coming in the pipeline. So there's no sense of urgency, no sense of they're going to miss out. They can sit back, relax. They can scroll through their House Sigma all day. They'll have another option coming out next week or the week following.
And I'll jump in and give you a bit of a break, Cor, and I'll take this chart on. And basically, this is months of inventory. And you can see here highlighted most prominently our condos, and we are now at 4.4 months, putting us into definite buyer's territory or balanced territory. But really, we're in, I think it's actually the stats that I've seen are a little higher than this. So a little surprised to see the condo inventory only at 4.4 months, but it's definitely trending up. And we are probably going to see more of that trend line continue up over time. And what's interesting is if you see it in comparison to row houses at 2.5 months, detached at 2.3, and semis at 1.6, what you can really see here is that the bulk of this buildup is really happening on the condo side. And the reason for that is you have, the stats that I've seen is 60+% of condos are owned by investors. And investors are facing all kinds of challenges right now in the condo market. Number one, obviously, we've seen this big run up in interest rates. We've also seen a flatlining and even slight downward pressure on condo rentals. So you're seeing pressure on revenues. You're also seeing an increase in carrying costs. And then when you have inflation taking into consideration those condos built before 2018, is they're not getting enough, only 2.5% increase per guidelines to keep up with inflation. The cost, especially in these older properties, is skyrocketing, let alone you have the pressures of inflation adding to that. So you've got a whole bunch of reasons why investors are putting their properties on the market, as well as they're starting to see that they're not getting the same type of appreciation as they were getting before in the past. There's becoming less and less reason for them to hold on versus just taking what equity they can out of it and maybe just putting it at 5% in a GIC somewhere safe and tucked away without any risks, with tenant risks and all the tenant rental laws that they have to face as well as a landlord. It's becoming less and less of a compelling story. And what's interesting about this is there used to be a time, because most investors who own condos, a lot of times had purchased them pre-construction. And investors never really thought much about the layouts, the floor plans, the exposures. It was just like prices are always going to go up. And so a lot of these unusable or unlivable or undesirable floor plans got swept up by investors who really weren't looking or didn't understand or didn't even care. And so you've got these pretty awful floor plans, layouts, tenanted, which is a very challenging property to sell in a market like this because it's difficult to get showings. It's difficult to have the property show at its highest and best. And so you have these tremendous disadvantage to these problematic condos that are investor owned. So what you are seeing when condos are selling in this market is you're seeing them generally be end user, meaning that the owner lives in the unit. They may have moved out, they may have it staged, and it will be showing at its highest and best. But even now, when you look at the pricing, you would think based on all of this data that you would have seen a greater drop. And a lot of the reason is because investors and end users on the condo side are like, listen, I don't have to sell. I really see a better use of capital if you're an investor, or if you're an end user, meaning that you live in the condo. It might just be like, well, I want to buy a bigger house or a bigger property, but I don't have to sell because I'm comfortably living here. And so far, you've seen these prices hold, and we've already seen our first rate reduction come through. So the thought being is that with more on the way, there's less and less pressure on condo owners or investors to do something, which is sell a property far below where they actually would like to see it.
Yeah, or return to market peak numbers. Something else I find really interesting about this, Ralph, is, and this is something that we talk a lot about with our clients, we work with a lot of people who are selling their first condo and then moving into their first freehold. Yeah. And they want to try to make this move right now because they're like, well, I just might as well pull my equity or capital out of my condo and then get into a low-rise property where the market's a little softer. And yes, I can sort of see there's advantages in that, but that is not an easy play. So you can see this run up in inventory. You're competing with, 4.4 months of supply out there. But then you're like, I want to move from my condo and I want to buy a semi-detached house in Leslieville.
Yeah.
And now you're competing in a much tighter inventory environment with only 1.6 months of supply, which is tight. And then you're competing in a price category that is the most attractive to a lot of people making that move as well. Like, your $1.2 to $1.4 million price point. And so anyone trying to make this strategic move is caught between a rock and a hard place because there's absolutely zero guarantee that their condo will sell. There's zero guarantee we can get you showings, and there's absolutely no guarantee we can get you a record-breaking, smashing, awesome price. You're just lucky to sell it for a healthy price. And then on the flip side, you're trying to make this move in a very competitive environment on the buy side, where again, there's no guarantee. You might be bidding on 2 houses, 4 houses, or 10 different houses before you actually get one. So I feel badly for people in this position right now. And we've had this conversation a lot lately. And I understand why it makes sense because your appreciation on your future low-rise home will probably out appreciate holding a condo. But to sell the condo, it's not the easiest thing to do right now.
It's certainly not fun.
It's not sexy at all.
No.
We've had this conversation so many times. All right, so I'm going to move towards condo sales. Again, transactions moving through the system. So obviously in January 2019, there was only 837 transactions. Then during COVID, it was very slow for all the reasons we can understand. Then we start reaching these market peaks. And actually, the most amount of condos selling through the system was around like March, April 2021. And then the market peaked again in that spring of 2022 with over 2,100 transactions. That's in a month. This is not a year. This is 1 month. And then we start seeing, again, thank you, interest rates. Thank you so much. Petering off. Look at this. Like it just goes down as if somebody's running down a freaking mountain here, right? Like it just goes, and then there's just like a little bit of a pick-me-up last year. And then we're seeing things really slowing down again. So condos are actually down, 29% versus last year in terms of transactions moving through the system. So 1,000 sales in June.
But if you look at it from the market peak in March 22, it's basically sliced in half.
Exactly. Okay, and we'll talk about prices. Ralph, do you want to talk about prices? You briefly touched on this when you were talking about inventory on condos.
We can look at the pricing here, and we are only down. If you see all this doom and gloom news, all this inventory coming online, all this inventory sitting on the market, and yet prices are only down 0.9% over last year. That is something that if anyone saw the preceding charts, they never would have predicted to have seen this. And I think it goes back into what we were talking about earlier, is most of these listings that are on the market are not in extreme duress to sell. Mm-hmm. And most of the conversations that we are having with potential sellers, investors, end users, they're all trying to make moves for various different reasons. And they may be under some type of financial duress, but we aren't seeing people, homeowners, investors willing to drop their pants in need of having to sell. Now, that could change as we have the renewal wave that's coming. We have 50% of mortgages still to renew under this new rate environment. But for now, it's a bit of a standoff where we have the sale prices somewhat holding firm relative to where we were a year ago, even given the low amount of transactions, the high amount of listings, the high amount of absorption rates. At least for now, prices are continuing to hold. And it will be really interesting to see what happens end of July, July 25th. Is there going to be more relief, and will there be another interest rate cut, which immediately won't do anything, maybe other than shift a little more buyer sentiment to move based on affordability?
100%. And I think a lot of people feel very panicked that they did not sell their condo during the market peak of spring 2022. And they're like, oh my God, I should have sold my condo then. And I do have a response to that, but I do also want to give you peace of mind that yes, there's been a drop, but it's only by 8.1% since the market peak. You haven't lost like 40%. Like it just honestly, when you go on like all of these, when you go on Twitter or any of these like online real estate blogs or whatever media outlet that you look at, you're always like, oh my God, I've lost 40% of my equity in my condo investment or whatever it is. Like 8.1%, it's not amazing. Like obviously we'd like to see it the other way for you, but like it's not enough to like give you that major sucker punch that we all think that we're feeling. So Ralph, I have a question for you. For our condo owners out there, and let's talk more investor necessarily in comparison to like an end user.
Yeah.
Should they list now or should they wait? And if they wait, what are they waiting for?
One thing that I find so interesting, and I'm going to answer that question in a second, but if you look at this chart and you look at where condo prices were January 2019, so let's say you bought a condo then, and I said to you, you have bought a condo now. There is going to be a pandemic. There is going to be a foreign buyer's ban. There is going to be an rise in interest rates in the overnight lending rate of 500 basis points, the fastest we've ever seen, what do you think in 2024 the value of your condo would be? You would not think that it would be $763,000. I mean, we have seen the worst case happen over the last 4 years. And yet from peak to trough, from 2019 to where we are, at least today anyways, it's a whole other thing to see what's actually happened with pricing. And so the worst has happened. Maybe there's still a lot of residual fallout and more inventory to come and more downward pressure. But if you start to think of the bigger picture, and it's always scary in the moment when you read these forms to see some negative stat, but then when you see the ups and downs and the trend line up in the face of everything, it's a pretty amazing story to tell. And then when you start to realize that there's been so much pressure on the development side of things, and condo sales are at all-time lows, construction starts are at all-time lows, cancellations of projects are at all-time lows. We're below like 20-year, well below 20-year averages and trend lines. You start to realize that in 2, 3, 4 years from now, there's going to be absolutely no new supply coming online. And so going back to your question, Kori, I would tell anybody who doesn't absolutely have to sell a condo that they own or need the capital for some more important investment, I would tell them to hold and wait, because you never want to sell at the bottom or near bottom of a market unless you have to.
Yes, I completely concur. And as I mentioned earlier, these graphs are giving me a feeling of optimism and just knowing that it's like life. There's peaks and valleys, and we're just following that along. And the market has been blasted with so much stuff. And I'd like to add one more to that, which is the capital gains tax as well.
Exactly. Which I think has helped actually had that expedited sales or listings, people trying to sell before it came into effect.
Yes.
June 24th. So I think that played out a little bit as well. But I think long term, you're going to see less and less inventory, new inventory coming online. And that will affect dramatically the supply side of condos in the future.
Yep. Completely. Ralph, you briefly touched on this about rental prices and the investor story. And does it make sense for investors to hold when rents aren't keeping up? And we've also lost renters too, because renters are like, frig, Toronto's expensive. I am not paid enough to live downtown. Inflation's insane. My groceries cost me like $1 gazillion a month. I barely can go to the movies, and this new pair of sneakers I want to buy are like $500. So renters are like, forget this. I'm just going to move home, which frig makes sense to me. So I think this is also just interesting for those that just really like the numbers and the stats. So I've just highlighted here basically the top part of this chart. You can see how many new rental listings there were in 2022 and 2023, and how many were leased in the next column in the table. So 35,000 were leased in those 2 years. And then the average rents. So you can really see the average rents rolling up here, but you can see 2022, it was 2,600. In 2023, it was 2,900 on average. So it's interesting, you take it up to here year to date, and we're midway through at the midway point. Yes. We're at 15,000 new listings. And we're also, which is not even half of last year. And then we're seeing only 9,000 leased, which is not even a quarter of last year. Yeah. And then the average rents have gone down by, I don't know, what is that? Like $150 per month on average. And in my opinion, and like I know I don't work for the CIBC or RBC or anything, is that because investors are pulling out of the marketplace, instead of listing their condo for rent, they're listing it for sale. They're listing it for sale, and people who are renting out their suites and holding are having to rent out for less. So the rental market's really feeling it too, which obviously affects the investor story. Anything you want to add to rent here, Ralph? No, and I also just think like when you look at 2023, $2,900 for the average rent, there's also just a cap as to how much people can afford. And we're in a situation where the economy is under a lot of stress overall.
A lot of young people are choosing to live at home. I think there's a whole bunch of natural barriers as well as to just how much people can afford, are able and or willing to pay. And so we're definitely, cooling off, at least for the time being, on average rents. And it might be like that for, the next 6 months to a year for sure. And then when you look at unemployment rates and everything else that's going on in the world, it shouldn't be a shocker that we're seeing a pullback from that record high $2,900.
Crazy. And what I think is actually hilarious is if I go back to 2003, when the average rent was $1,598, that's when I lived in a house with 5 people around like Avenue Road in Lawrence. I think we all each paid like $400 a month to live in this house.
Wow.
But it's also back in the day where like kids would do that like after university, and you would just all live in one shitty big house with one bathroom and pay the least amount of rent possible.
That was before Liberty Village.
Exactly. It was before the concept of Liberty Village and Fort York and City Place and all this stuff, which I would have loved doing at that age, but it does kind of crack me up. Is there anything else you want to add to some of these market stats we talked about for our viewers today, Ralph?
Yeah, there's a couple things. I mean, it is really interesting to see this data on a graph form, and it just reminds yourself that there are ups and downs. And I think people have seen a lot of extremes in the market, especially since COVID, because there were so many outliers affecting the market aside from the market fundamentals. And so it's just a good reminder that there are cycles to the Toronto real estate market, just like any market. And it looks like we, for at least a time, will be entering downward pressure. How down it goes is really difficult to say, but I do think that we are, we clearly are at the other side of the main driver of the pressure on the market, which is interest rates. And we have seen that first decrease happen in June. And what was interesting is a lot of pundits and analysts were predicting that after that first rate cut, what we would see is a jump in demand, not so much because affordability is miraculously resolved, but that it would signal that we are at the end of the cycle and that from here it's downwards, and a lot of these buyers sitting on the market would jump into the market. What happened actually was the opposite. And what happened was you had a lot of potential sellers waiting for that first decrease in anticipation of all these buyers that would jump into the market. And a lot of these buyers, especially on the condo side, have remained on the sidelines. And I think we'll need more rate cuts than we've seen before it will start to make a dent. Now, it's important to note that there is a difference between the overnight lending rate, which affects variables, versus the fixed rate. And the fixed rate has been lower than the variable rate for some time now. And so it was much more of a psychological move that people were anticipating because real estate is really emotional. But I think at the end of the day, we're going to need to see a few more cuts before it starts to have a real impact on the market, maybe another 75 basis points. It's interesting because inflation, the last report, it actually jumped up slightly from 2.7 to 2.9, which was disappointing. But one of the other real important markers is unemployment, and we hit 6.4%. And it's really interesting to note that pre-COVID, which is a marker that we've been using here to look at numbers, we were at 5.7%. Mm-hmm. So the number that we're at, 6.4%, marks where we were in 2008 when we had the subprime crisis, right, which is really interesting. And even more interesting is that in Toronto and in the GTA, the unemployment rate is even higher. I think it's trending at about 7.4%. So this data is going to be very important. It should be anyways, in the Bank of Canada's decision-making process. And their next meeting is, I believe, July 24th. Mm-hmm. So it'll be really interesting to see what they do. I am hesitant to believe they're going to do necessarily the right thing. But if you look at where the economy is, where you look at unemployment is, and you start to even break down the CPI numbers, and you see that when you remove housing, which is 30% of inflation, we're way below where we were at the pandemic, hovering at about 1.9%, which is below the 2%, mm-hmm. 2 to 3% target range of the Bank of Canada. So we definitely are going to need to start seeing some more increases. They are coming. It'll be interesting to see what the Fed does and the U.S. elections decreases. And it'll be, thank you for that, Kori. And you got me all fired up because I was about to start talking about the US election.
Well, let's not go there.
Well, the dumpster fire that it is, it may cause, as we've seen before, shockingly with US elections, people just to be distracted. And I think people are very much going to be distracted with the circus that's going to be happening down there this fall. So that could have some type of an impact as well on the market. So really, really interesting times in the short to near term. And it'll be really interesting to see how things play out.
I love it. I'm really have my eye on like 2026, 2027 for like full resilience to be back.
We shall see.
We shall see. Well, I am so appreciative for you and all your amazing commentary, Ralph. Viewers, thank you so much for joining. Of course, as I mentioned earlier, if you want specific stats or for me to pull something that is more customized to you, just let me know in the comments and I'll grab that for you. And if there's anything else that you'd like to see us cover when it comes to market statistics or education around the data, just pop it into the comment section below and we're happy to address it. Thank you so much for joining us today. Ralph and I always appreciate your attention to these podcasts. And don't forget to subscribe and like, of course. Thank you so much.
Thank you.